Hi there. Today we're going to talk about understanding and being able to read your loan estimate, also called an LE. So, the loan estimate is this 3-page document that the lender gives you that tells you all the important details about the mortgage that you've requested. We're going to go through this page by page. So, here's what page 1 looks like, and you're going to want to double check all of these things. Hopefully, your loan officer has checked it for you, but it's a good idea for you to go over it as well. So, this top half, we're going to be checking your name, make sure your name is spelled correctly, the loan type, if it's a purchase refinance, what type of loan, conventional FHA. If it's locked, as you can see this example, it does show it is locked. Then we're going to check the property address, the sales price, or if it's a refinance, the value. Now going down under the terms section, we verify our loan amount, the interest rate, and then the monthly principal and interest. It will also reflect if there's a prepayment penalty or balloon. And most cases, loans these days do not have either of these scenarios, but it's a good idea to check just to make sure the lender didn't sneak something in. The bottom part of the loan estimate on page 1 shows your projected payments. It will show the breakdown of the principal, the interest, if it has mortgage insurance, your estimated escrows, and a total payment. We'll break all of this out for you so you get an idea of what you're expecting. And if you have mortgage insurance and let's say it drops off after 7 years, once you get 20% equity, then years 8 through 30, it will show you a payment. Again, if you have a loan with mortgage insurance, if you're putting less than 20% down or getting an FHA loan, it will show mortgage insurance. And then at the bottom, it's going to show you your estimated closing costs. Now keep in mind in that section, it will add your costs as well as any projected seller costs. So in the event that number looks a little high, don't worry because again, it does include all of the costs, whether they're yours or not. And then that last line is your estimated cash to close. That is the amount that's expected from you to bring to the closing table. That would be your down payment and all the closing costs that are expected. So make sure you review that. Here's what page 2 looks like. This one has a lot of information on it, but it's important that you look at sections A through J. And we will go through all of this together and it breaks down all of the costs. So our first section A shows you origination fees, discount fees, lender specific fees. Section B is services you cannot shop for. You can't shop for an appraiser or where to pull credit or get a flood cert or things of that nature. And then section C are the services you can shop for. You can pick your own title company or pest inspector or surveyor. However, I'd suggest going with recommendations from your lender or realtor. The next section on the right-hand side of page 2 shows the other costs. These are the recording fees and transfer fees with the city, the county that you should expect. F is your prepaids. You're going to, if you have an escrow account, you're going to have prepaids. You may collect 6 months of insurance, 12 months of insurance. There will be prepaid interest depending upon what day of the month that you close. And most loans are going to have prepaids for property taxes. In the event you elect not to have an escrow account with 20% down or more, then you will not have prepaids for insurance or taxes. Section H, which is the bottom of page 2 on the right-hand side, shows the optional title policy and other costs. Then in section J would show any credits from the lender. And then the bottom right-hand corner does a summary. It will show you all the calculations of cash to close with your down payment, any deposits such as your earnest money, any seller credits, and anything else. And the estimated cash to close on the bottom line should match up with page 1. This is page 3, and this form will show you a summary with comparisons and other things. So this top half, again, shows your loan officer and their license number. And this middle section of comparison will just show you how this loan compares and how much you're going to pay principal and interest over the next 5 years. The APR is the measure of how much this loan costs. It takes into rate, points, fees, and other charges that you pay to get this loan. And 9 times out of 10, that APR is higher than your interest rate. But your loan is dictated and your payment is dictated based upon your mortgage rate, not your annual percentage rate. This other section called TIP, total interest percentage, tells you how much interest you're going to pay over the life of the loan. And most people are not keeping a 30-year loan and paying all the payments, but if you did, this is showing you what interest percentage is over the life of this loan. So let's say this example, you have a $100,000 loan, your tip is 50%, you would be paying $50,000 of interest over the life of a loan for that $100,000 loan. The bottom part of the third page is the other considerations. Talks about your appraisal, if the loan is assumable or not. It does say we need homeowners insurance. Talks about fees for late payments and servicing, if the lender intends to keep the loan and service it or not. And most lenders do not. Depends on where you're obtaining the loan. But that doesn't mean your terms change. It just means of where you make your payment. I can't wait to help you on this journey. And if you have any questions about your LE, please reach out.